We are really, really lucky. We're really, really lucky because we get the chance to live in such an exciting time. We are living in an amazing period of growth. We're seeing changes in our market. We're seeing reimaginations and reinventions of business and business models. And what I've been really inspired to hear over the course of the last few hours we've been together is that the people in this room here are about not looking at the sort of short term. Corporate venture capital is really got this eye on the horizon. It's really thinking about what's going to happen next for the markets and for our businesses. Remember someone from GE that I spoke to once described corporate venturing as being the tip of the strategy spear for big companies. And I thought that's a really great way of describing what the work all of you do is focused on. But I also, being from Canada, are there other Canadians in the room? Actually, I know there are other Canadians in the room. There's some hands up. One of my greatest sort of reflections or inspirations, I think, about thinking of the future actually comes from a great Canadian hockey player named Wayne Gretzky. And the great hockey player Wayne Gretzky used to say that what made him so great was not that he skated to where the puck was, it was that he had the ability to skate to where the puck was going to be. And I have a sense that that's sort of a vibe that we're hearing a lot in this room. And I think we can actually sort of reflect on the conversations we've already had about some of the big themes that you guys are all seeing in the work that you do. Yes, technology is an important part of it. We know technology is going to enable some of the great change that we're seeing on the horizon. But actually, what's been really remarkable is to reflect on how the technology we've been talking about is about technology that has the potential to unlock the potential of people. So we're talking about healthcare, we're talking about education, we've been talking about refugees. So I think that's something really special that we need to sort of hold, because it's important. There are a lot of really big challenges that we're facing out there in the world today. We've got huge increases in population that are coming in our direction. We've got resource scarcity. We've got mass urbanization. These are problems that have huge opportunities to solve. And in solving those problems, in addressing those challenges head on, we're going to see huge space for markets to open up and for companies to play into that. Now, what's really cool is also there's new language that's emerging to talk about these new opportunity spaces and what the sort of models are in which corporates as well as other investors can start playing into them. We're seeing the rise of what's called profit with purpose. And this is interesting to me because this is about rejecting a traditional binary way of thinking about we have profit and we have impact and purpose on one side and we have profit on the other. Instead, where we're going is a place where those two things are actually directly linked with one another. And actually, if we can focus on creating focus on having purpose, and purpose that's really meaningful and creates impact, then what can happen is profit will follow, and thus we create this virtuous cycle. And you don't have to take my word for it, because actually there's some really interesting signals we're seeing. Just a few weeks ago, the UK edition of Wired came out, and the headline story is Build Something Meaningful, the Rise of Mission-Driven Businesses. And it's a whole magazine full of businesses like Kickstarter that are doing really remarkable things because they're focused on creating a sense of purpose to what they do. And again, the profit follows. Now, this session is called Impact. I think it's in the headline somewhere. There we go. So we know that we're going to have a conversation about impact. But I actually want to challenge all of us to think about this idea of yes, having impact, but actually about creating positive outcomes. And positive outcomes are really interesting because they are about creating benefits to you and your businesses, but also creating business to society and to the environment. And that's really the space we're going to explore over the next half an hour. Now, I've had the great privilege of doing a little bit of research over the last few months onto examples of the business models that corporates are following, the benefits that those corporates are feeling and being able to absorb because of the initiatives they're starting, their innovation and investment strategies, by focusing on creating positive outcomes. And we've also developed a way of understanding what are the practical steps, practical and tactical steps those of you in the audience can start taking in order to start adapting or creating new strategies within your companies to look at these positive impacts. So again, you're going to hear about that from our panelists in just a moment. And what's really great is that we also have identified a couple of sort of secret sauces to what will really make this work, these kind of strategies work well. And I'll give you a spoiler alert. The secret sauce that we've come from all the companies we've talked to is really about the importance of partnership and collaboration. So you're going to hear that really emphasized a lot. Now, without further ado, I want to throw it over to our remarkable panelists, which are made up of both the companies and the institutions that have been a part of helping us develop this research. And what I'm going to do is probably start, if that's okay, with Julia, who's actually co-author of this report. But also, Julia designed and developed Centrica's Ignite Fund. Julia, do you want to tell us a little bit about Ignite, but also the steps that you went through in developing a strategy that creates positive outcomes?
Great, thank you, Shah. And I'm delighted to be here, my first engagement at the Corporate Venturing Symposium. So I wanted to take you back for a moment to 2011, when energy companies here in the UK were massively under fire, because there was a discussion going on about the level of profit that was acceptable for an energy company to make. And, you know, consumers were not trusting energy companies, they didn't believe them, the chief executives were paid too much, and there was a big breakdown in trust between the organizations and the general public and society. So the government response was, well, we'll put in more regulation. And that made things a whole lot better. No, it didn't for anyone. Our chief executive started thinking about, well, how could he use his best and brightest people to think about the ways in which an energy company could contribute more widely to society. And Centrica provides £400 million through its license to operate to society every year. So a group of people got together and they said, well, how about if we invested some of that money in businesses that were having positive impact, and started to think about that. So they went and talked to the CEO and they said, could we have £2 million to invest in some businesses that are creating social change? And he said, that sounds like a really good idea. How about you have 10 million? Because I don't think 2 is enough. And if we think about it in the context of 400 million, it's not very much at all. And then I got a phone call. I was a head of strategy for our North American business, and I'd been thinking a lot about how we interacted as a business and why we existed and what our purpose was and how we could start to operate differently. So I got a call saying, come back to the UK, build this strategy for something we want to do. We don't really know what it is, but we're going to give you £10 million and you figure it out. So that's a pretty cool job to have, right? So I came back to the UK and there wasn't anyone doing this. So I went and spoke to a lot of people, both in the impact investment community, the corporate venturing community, and the whole ecosystem, and set about thinking about how we could invest in organizations. And so the strategy we came up with was that it had to be an energy or energy-related business that was delivering social outcomes to beneficiaries in the UK. We would invest £50,000 to £2 million. We would have a minimum of 2% return, and we wanted it to be strategic and develop our talent. Quite a few things in there. So I wanted my cake and I wanted to eat it too. And so I went about setting up a structure, and I looked for a fund manager, and they went, you're trying to do too many things. So I said, okay, well, I'll try and do it myself then. So I set up an LP structure internally within the organization, and we set up an external investment committee. And we sourced a team of internal people from strategy and with a financial background. And then we worked with a number of external providers to set up a measurement and screening set of activities. And we looked the social outcomes of the investment into the deal that we did with companies. And we launched on the 4th of December 2013 with an event with very few people there. And everyone told us we were completely mad. This would never be successful. 3 years on, we've invested 8.8 million in 18 businesses. We've had our first exit. We've had 10,000 beneficiaries here in the UK have improved lives as a result of our investments. We've generated over 10 million worth of revenue through these partnerships with the organisation, and 300 of our people have had talent development opportunities that wouldn't previously have existed. So we're really, really proud of what we've managed to achieve. And we want to encourage others to try and do it too, which is why I wrote this report with Shah, sharing all of my experiences. And you can read about the good, the bad, and the ugly in this report. And I'll leave it there for now.
Great. Thank you, Julia. I want to move on to Jean-Christophe, who's joined us again, straight from James Bond style off the motorbike. Jean-Christophe, could you talk a little bit about Danone and the experience that you have in creating positive outcomes through your innovation and investment strategies? And in particular, one of the themes we have heard in the room a little bit earlier on today is about time horizons. I know you and I had a fascinating conversation about how you think about time horizons in the work that you do.
Can you hear me? Yes? It's working. Okay. Good afternoon, everyone. It was a fantastic ride, by the way. I encourage you to experiment it. What we have done since the past 10 years in Danone is try to turn corporate social responsibility, what you used to name CSR, into common sense revolution. It's another way to name CSR. Basically, what we're doing is integrating as much as we can sustainability inside the way we do operate. To do so, we have been creating several funds to support innovation that are now on their way to become mainstream. It started in 2007 with the first fund named Danone Communities, you may have heard about. It's an investment fund of 70 million euro that has been co-created with Mohamed Yunus as the first initiative on a completely different type of business model named Grameen Danone Partnership in Bangladesh. 2 years later, in the middle of the crisis, we decided to create a fund named Danone Ecosystem Fund. I'm very, very surprised. I was 2 weeks ago in a very nice event organized at Oxford, and I heard 200 times the term ecosystem. Not from an environmental perspective, but from a business perspective, showing the interdependency between a lot of stakeholders and in our case, this fund has been created in the middle of a crisis, deciding to try to strengthen our ecosystem partner, the weakest and the smallest partners we are working with every day, and ending up after 6 years about a co-creation of more than 65 initiatives all around the world, with small farmers, farmers of subsistence, micro distributors, street vendors, waste pickers community, caregivers community. And we are now also as well on our way to exit some of our projects successfully with a significant social impact. Those 65 initiatives so far have been helping to empower more than 35,000 people. We created more than 3,000 jobs at this stage. And at the same time, we delivered an amazing business value that was absolutely not planned as such. Of course, we get access to new type of material, mainly around milk with the small farmers, new opportunities of micro distribution and selling our product, waste picking, about recycling, packaging, and about access to waste. The initiative, by the way, are generating today a turnover around more than 60 million euro. Of course, the break-even of most of those initiatives are not there today. We were very maybe over-enthusiastic when we created those initiatives step by step all around the world, expecting to reach a break-even on those programs after 3 years. But you were talking about a time horizon. It is taking a little bit more time, but it's worth it because the return on investment is not only coming from the fact that you have direct and tangible type of things such as selling more product or accessing to competitive raw materials. It's also coming from intangible benefits, new opportunities of partnership, brand equity, reputation. Those are things that you need to value when you make such investment. 2 years after, we launched a new fund named the Livelihood Fund, which is a fund of helping to offset through a carbon credit mechanism part of our CO2 emission. And last but not least, we just launched a new initiative with our colleagues from Mars company. Both our company have been decided to create a new investment fund around partnership here dedicated only to small farmers to strengthen the value chain, the supply chain of both of our company, building inclusive partnership with smallholders. So after 10 years, just in a nutshell, what I can tell you today is that we are on our way to move from what you could name small-scale initiative to mainstream initiative. The reason why is that as of today, we've been learning a lot, gathering, and I will be pleased to talk about the partnership. We are co-working currently with our colleagues from IDB. But we've been learning a lot and gathering a lot of very strong stakeholders to be part of the solution and not part of the problem anymore. And becoming mainstream is a big challenge. Moving from small size initiative to mainstream and scaling up is always putting the tension, the global value that you can expect behind this type of program from an economic standpoint, environmental standpoint, and social standpoint. But the thing that we've been noticing is if you put, and this answer to your question, if you put, again, a different time horizon in terms of return on investment, you will find clear benefit to those type of initiatives that are going far beyond tangible one, short-term one, even if it was a surprise for us to discover that, yes, we could reach some very short-term tangible return on investment. So this is what we are currently doing. This is all encapsulated into a vision named Danone 2020 that is really reshaping the way we do interact with our ecosystem. Hopefully, and this is the weakest point of Danone today, I don't think we leverage so much this through a communication with our consumers. A lot of people are talking about, small trend, the millenniums generation that is expecting to see behind purposeful investment or purposeful job, purposeful product. And our brands are step by step to claim the value and try to offer to a consumer a different type of experience, which will be a new way for us to have the return on investment we expect behind this type of initiative.
Fantastic. Thank you. Thank you very much, Jean-Christophe. I think it's interesting. We've heard from an energy company like Centrica that's doing work here in the UK, and we've now heard from a food company and really operating globally with the strategy you're engaging. Ali, coming from the financial industry, do you want to share a little bit about what you do at JP Morgan? And I think in particular, it would be interesting to hear about how you're engaging your clients on topics of sustainable finance and impact investing.
Sure. Yeah, I think you can hear me well. Thanks for having me here, and thanks for organizing this. I'll share a little bit of our story, which is taking you back in 2007, which is an interesting and ironical timing a little bit because it was just before the outburst of the financial crisis. And basically, there were a small group of people within JP Morgan Chase who recognized that, hey, there's a number of these trends happening. We are seeing existing companies, large clients having to cope with some of the big, risks related to climate change and others, but also having to find new markets and having to find new ways of addressing new pockets of demand. When you look at the map of the demographic trends across the world, you see where there's young population, where there's economic growth and demographic growth, and so we thought existing companies having to change somewhat their focus. New companies, as a fact, as your magazine shows, create today with a different sense of purpose, and we started to see as well our investor-based clients expressing a desire to invest differently, to align their investments with, if not their values, at least some sort of, linkages to the real economy. And obviously, the financial crisis in a way accelerated that trend, which at least for a small team within JP Morgan was a really good news. And then we said, so there is this happening. What do we do about it? What would be the role of a large investment bank? And we said there's a couple of challenges here. First of all, we're talking about a market that's very new, very difficult to define. What do we mean by investments with a purpose? And second of all, even if we're able to define that, it's going to be small and it's going to be relatively niche at the beginning. So how do you push that within a very large established structure that's very used to work with very big numbers and initiatives? So the first thing we've said is we know this is very relevant to the business and investment world in the long term. So we need, one, to have the right skills to work on that. And two, we need to have a separate, dedicated effort, which means it's very difficult to take the culture of the investment bank, an established culture, and transpose it directly into this market. So we said, let's create a new team that has the right skills, but that's separate from the established institution that has its own DNA and its own culture. And so we set up this impact investing team, and we said, let's have this team is tasked with what would be the role of JP Morgan serving our clients in helping this market to grow, in helping the market for allocating capital and investments to projects with social and environmental goals. And so we said, there's not a traditional banking role as an intermediary to play today. We can't just go and say, we'll play the role of an intermediary, we'll broker deals, or we'll introduce investors to companies, and so we said what we need to do is to have a holistic approach, and either we play the role of an operator, either we roll up our sleeves and we participate in the market, we help build the market, or we wait 10, 15 years for that market to mature, and we come back and we play a more traditional banking role. And so credit to the people at the time, they said, okay, let's actually play a role in this market. And so we created that team with the investment part and thinking about corporate venture capital. The investment part in our case was only a piece of the puzzle. And we said, if there was a team, if there was a new unit looking at this market, what would that team do? And so we said, we'll do at least three things. One, we'll create knowledge. We'll do research, like your reports. And we'll carry on that discussion with some of our clients, some of our investors, around what it is that we mean by impact investment. We'll invest money because it's important to walk the walk, and it's important to be at the table and invest in those projects and demonstrate that, yes, you can put money into some of these companies, yes, that money can come back. But most importantly, and we've allocated $100 million for an investment fund that we've invested almost fully in the past 5 years, across the world, in companies and in funds that have that, measurable, intentional, positive impact. But really with the idea of not necessarily investing for ourselves to make returns, but with the idea of we want to be able to demonstrate that there's a real investment thesis there. And so what we want to demonstrate is basically two things. One, there are projects that are investable where you can invest, and some of them will make very attractive commercial returns. Some of them will not, because they're not targeting a market that can afford that, and that's fine. Because the second thing we've tried to demonstrate is there's a very diversified investor base for these things. And so I'll just give you two very quick examples. One company we invest in is a microinsurance company that provides insurance through mobile devices in emerging markets, and they have 500,000 new clients per month. And so you can imagine that that's a very commercial type investment. But we have other investments where we've designed, venture capital fund type structure with the Gates Foundation and other types of funders that's basically targeting or trying to bring private capital or blending private capital with philanthropic and government money to back research and development for disease that affect disproportionately poor countries, so HIV, malaria, and things like that. And so for something like this, you can't expect a very high financial return. So that's been our experience in the past few years, and the way we engage our clients, basically, it's one of two things. Either we identify a partner, whether it's a corporate, whether it's a government, whether it's a foundation that says, we want to do things differently, we want to tap into a different investor base, or we want to try a venture capital type approach to a issue that's been mostly seen from the philanthropic perspective so far. That's one. And two, when we're able to either invest or help design some of these programs, then we also go to our clients, whether they're again corporates or they can be investors, institutional investors or private investors, and we say, do you want to join?
Great, thank you, Ali. I'm looking at our time clock. I know we started a little bit late, so am I okay, Jim, if we go a little bit over? Okay, excellent, because I want to make sure we give lots of time to our final speaker who's joining us today, Elizabeth, who's flown all the way in from Boston, Washington, Montreal. You've kind of been around the world.
What a journey.
But Elizabeth, do you want to talk a little bit about the IDB, and in particular MIF, the Multilateral Investment Fund that you're a part of and are leading, and I think people in the audience might be really interested in hearing a little bit about what you're seeing in Latin America in particular as areas for creating positive impact.
Sure. Anyway, thank you for including me. It's quite nice to be here in London, and for those of you who don't know the Inter-American Development Bank Group, we are the largest source of development finance for Latin America and the Caribbean. And within our bank group, we have something called the Multilateral Investment Fund, or MIF. And this is where I sit within the bank. And this fund actually straddles both our public and private sector bank partners. And our job, which is a wonderful job, is to be the risk taker. We're the innovation lab for the group in the sense that we are really set up to pilot, to take risk, to experiment with private sector partners throughout the region to develop new solutions to the various development challenges we're facing. And unique in the development finance world, this fund was set up with a blend of tools. So we have catalytic grants that we use. We also have debt and equity, and we can blend these instruments. And to this end, we've had a long track record really working with private sector and working with corporates as well. We've had kind of a history of corporate engagement. The fund is a little over 20 years old now. And when we work with corporates, it's really been to generate social impact in the communities where they're operating. For instance, we've been working with Starbucks, Ecom, and other large coffee companies to really improve the capacity of small farmers and the resilience of these farmers overall to enhance the value chains. We're working with Microsoft, Walmart, Caterpillar, and others to really reduce the skills gap employers are confronting. And our job is to sort of pilot different interventions with youth skills training and labor intermediation programs in that area. But at the same time, historically, really for the last 15 years, we've been very active in the entrepreneurship and the innovation space in Latin America and the Caribbean. And we really have seeded the venture capital market. So we've invested a little over $250 million, but that money has seeded over 66 venture capital funds in 21 countries. And because we are a public finance institution with a private fund, we're able really to do the necessary diligence and to crowd in other institutional and other investors. So with that investment we've made throughout the venture capital funds in the region, we've really unleashed over $1 billion in other investment activity. And increasingly, we're moving into the impact investing kind of area as well as Ali. So we are sort of the part of our bank that really is at the heart of creating the right ecosystem for impact investing as well. And so for me, this has been kind of a fun, like Jean-Christophe, we've been at this a long time. And we've been watching sort of the continuum of corporate social responsibility in our programs and watching that continuum where today we really do see an interesting convergence of business, investment, and the development world all really coming together in new and different partnerships that really would not have existed even a couple of years ago, I think. And some people attribute this to the build-up of the Sustainable Development Goals and sort of the impact conversation we've been having. But whatever, we're very much at a different inflection point, I think. And so this convergence is really creating a lot more opportunities for corporates really to partner with institutions such as the IDB and the Multilateral Investment Fund, with very much with the intention of positive outcomes in the communities in which you're working. And if you look across our region and you read Julia and Char's report, more importantly, you'll know that there are a few key areas in Latin America where this would make the most sense. There's a huge need in the region for business support innovation. And you're seeing with many of you in this room, I'm sure, a lot of startup activity. Corporates are in the startup business, which is really kind of a fun dynamic for all of us. And that is needed in Latin America. I see this more, and particularly in technology-driven areas and in other parts, including the Centricas here in the UK. But business support innovation is quite important. Financial investment is important. We're looking with partners like Danone here to really drive additional financing for investments, startups, programs in Latin America. So the need for sort of thinking differently about venture capital, as you were saying, perhaps the returns are not, we're looking for financial returns and we need those financial returns, but the capital may be more patient, or the return might be less, but as Jean-Christophe is saying, the requirement that the startup that you're incubating or accelerating has very measurable social or environmental returns is a huge additional benefit to that financing. And then finally, we see a lot of opportunity for supply chain innovation in Latin America. There's a number of your food products from Latin America. You have coffee, you have cocoa, but there's a lot of demand for increasing supply chain activity, and for a number of reasons, not the least of which consumers are really requiring that there is more sustainable, traceable sourcing of food products. We see there's an opportunity to really introduce different ways of sustainability into these value chains and to have that added innovation, and we're quite active in these areas. Am I done? Do I have any more time?
Well, I'll tell you what, why don't we do one more rapid fire, because I think, one of the themes we've picked up a lot in the conversations is around the importance of partnerships, and that there are really actually wonderful partners that exist to help anyone who's on the journey and is interested in exploring innovation and investment that's creating positive outcomes. So I guess I wonder if I could just ask each of my wonderful panelists very quickly, sort of one sentence of, if you could choose a dream partner for you to work with to take what you're doing now to the next level, who would you want to work with? And maybe we'll just start here, Ali, if you want to share your immediate, intuitive response.
For me, a dream partner is, it's hard to respond just in one sentence, but the partner that's one of the best partners we can find is a corporate that understands that there's a business imperative, not only a moral imperative, but there's a business imperative or opportunity in taking the best skills they have and taking their best employees, their strategic guidelines, and focus on trying to penetrate those new markets.
Perfect. That was a good sentence. Julia, do you have a sentence you can share?
I'd love to bring together a coalition of corporates who all have the same purpose, want to do pre-competitive collaboration, and want to work together to deliver positive outcomes.
Excellent. Thank you, Julia. Elizabeth, your dream partners. Who
My
do you want to
dream
work
partner, we're really looking to partner with companies that are able to help us incubate and accelerate new business models, new entrepreneurs, and to have that shared financing opportunity as well.
Excellent. Last but not least, Jean-Christophe, who do you want to work with?
If you allow me, I would say my dream partners with a S.
S.
because I think that we need now to acknowledge that the solution of tomorrow are requesting different type of perspective. And it might be a little bit complex to activate, but honestly speaking, it's worth it. And having around the table a for-profit organization, an NGO, an institution like IDB, academics also as well, to bring such their expertise, is completely putting you in a new dynamic. Even though, okay, you will have to take time to agree, believe me, it will be much more powerful to have all those partners together, because yes, we do have to face complexity, and we request to have this type of complementarity between the different type of actors.
Excellent, thank you. I want to thank all of our panelists here, and what you've heard is that yes, there's complexity, right, about engaging in these spaces, but actually what you need to do is work towards that complexity and take your first step.